I'm really happy you're here today. My name is Clayton Collins. I'm the CEO at Housing Wire. And at Housing Wire, our sole mission is moving markets forward. We have a team of reporters and editors who are covering the mortgage industry. And our goal is to be the sole source of news for you. So we really do. Those of you who read us every day, thank you very much. Now, what's really exciting about this panel for you and for me is the title. It's Inside the Minds of Masters. And I have the pleasure today of digging into the minds of these four masters. And the format is I'm going to make introductions, and then we're going to go one specific question for each panelist, and then jump into a hopefully pretty lively discussion. So let's get started. So kicking us off, Nima Gamsari, CEO of Blend. Welcome to the panel. I'm going to start with one question for you, and then we'll go down the line and question for the rest of the group. So Nima, you're the only non-lender on the panel. I've heard your focus at Blend is being the future of lending. So how are you working with lenders today?
So we primarily work with lenders on the retail side today. And what we do is we help them drive a better customer experience through digital mobile technology, as well as better efficiency through using data to automate a lot of the process that historically was very manual.
Excellent. Thank you very much.
Yeah.
Next, we have Phil Shoemaker, the COO at Caliber Home Loans. Phil, Caliber has grown into one of the largest lenders in the country with a multi-platform approach. What are you seeing? What trends are you seeing in retail and correspondent that you are not seeing in the wholesale channel today?
Okay. Well, I think down and up. I'll start with that.
Down and up. Okay.
Yeah. I mean, we're actively engaged in M&A. We obviously see a lot of financials for correspondent lenders, and I will tell you that, as you guys probably realize, the market's pretty tough right now. And I think the trend I'm seeing is our retail peers, a lot of the other correspondent lenders are really struggling. And I see that as a huge opportunity for wholesale, right? Because you guys are way more nimble, right, than as I think someone in the prior panel pointed out. You guys have flexibility, you have a lower cost. And so I think that, in this market, I fully anticipate that wholesale is going to continue to grow share, and I would not be surprised if I think we're at 13% now or somewhere around there. You see it get to 20% or so, and so take advantage of it while you can.
Thanks, Phil. All right, Brian View. Brian's the Senior Vice President at Flagstar. So, Brian, after Dodd-Frank, many banks exited wholesale entirely. Flagstar is one of the few banks still in the channel. What do you anticipate? Do you think more banks will come back into or enter the wholesale market, or is this a trend that we'll see continue forward with?
So from our perspective, we hope they do. We hope that some of the bigger banks get back in the space. I think it's good for our business. It's good for all of you. It's good for consumers. But the reality of it is it's challenging to be a bank in third-party originations and specifically in wholesale lending. We deal with the same four-letter regulator that we all kind of deal with, and then we have another set of regulators that we get to deal with as a bank. And so the expectations of our banking regulators are a little different than the CFPB, and it's a challenge. You have to build a significant cost infrastructure around to support that risk management. And so, again, we're hopeful that more will get back into it, but I think it's going to take some time.
All right, excellent. And final panelist, Matt Ishbia, the President and CEO, United Wholesale Mortgage. Matt, welcome to the panel.
Thanks.
So UWM has seen a lot of growth in a period of ups and downs. What can you credit some of the successes you've had in recent periods serving the wholesale market?
Yeah, from my perspective, the growth of UWM is attributed to people here. The brokers. We feel like we've done a great job, and there's a lot of great lenders. These guys and a lot of other great lenders here as well. We really think that the difference lately has been our partners. Many of the people in this room have grown faster than the rest of the market. So as Phil mentioned, a lot of people in retail are down. A lot of correspondents are down. A lot of our brokers are up. And it's all about partnership, helping them grow. And so our business is really just, how do we help you guys do more loans? And that's what I love about AIME is it's all about you guys. And so we've seen a lot of success. A lot of our brokers that last year's first quarter, this year's first quarter, they're up 20, 30, 50, 70%. And luckily enough, we're partnered with them. And because of our partnership and their partnership, we're all growing together. So we've seen a lot of success, and we're very excited about 2018 and beyond together with brokers.
Excellent. Thanks, Matt. So we're hoping those intro questions would give a little insight into what these gentlemen are thinking about and what they're facing with their business right now. Now we want to jump into more of a discussion, and we have a few questions prompted up, but I'll direct them to one of the panelists, and I hope that we can keep the conversation going as we move through some of these discussion points. All right, so to kick off the conversation, how should originators use the current market to their advantage? And hopefully some ideas that are kind of thinking outside the box. Matt, you want to kick us off on that one?
Yeah, no, so everyone says, and I'm sorry, I got to stand up a little. I can't sit down, as you guys probably know. Just in
You're
general.
much younger.
Yes. But I think the market's, a market like this, rates going up, it's an opportunity, right? I think there's a big opportunity out there. From the last panelists, which were great, talking about recruiting. A lot of loan officers are looking around, they're at a retail branch, and they're saying, what am I doing here, right? You can recruit them, have them join your team. Also, educating realtors and consumers right now, brokers are the best option. It's the best place for an LO to work. It's the best place for a consumer to get a loan. That's not my opinion, that's facts. More options, more products, better pricing. So we're real excited about it, and I think that it's okay to be different. So the thing I would tell everyone here is you don't have to follow the path that everyone in the past has followed. You can do something different. Think outside the box a little bit, whether it's marketing to realtors a certain way, whether it's follow up your past clients. I really think there's a big opportunity, and it's okay to be different. You don't have to just, I buy leads only this way, or only hire loan. Hire inexperienced LOs, try that, see how that works. Train someone from scratch, hire an experienced person, try different things. But I think there's a big opportunity, and usually when the market contracts a little bit like this, this is when people grow. This is the place for an opportunity for people to grow, and so I'm excited about it, and I think hopefully a lot of you are taking advantage, and I know a lot of you are.
I pretty much what he said. I will say I think that it really is all about purchase. I mean, you got to continue to find different ways to engage your referral partners. It's critical you stay in front of your borrowers. Brokers, I think, have a huge advantage in terms of the lender options that are out there today. To Matt's point, there's a lot of really good lenders that get purchase, right? And so you got to align yourself with those lenders because at the end of the day, the best way for you to get more loans from your referral sources is to continue to close your loans on time, right? And then of course on the product side, as rates continue to rise, the more options that you have from a product standpoint and you can provide to your referral sources is going to also drive business. And so I think I oversimplify things a little bit. I think technology is incredibly important, don't get me wrong, but at the end of the day, what I've seen over and over again the last 22 years is, it's all about purchase. Stay focused on purchase business and you win every time.
So on that focus on purchase, have you heard from any of your clients, any of your broker partners on out of the box ideas on leveraging this purchase environment and ways to connect with their referral sources, the realtor community, and any great ideas that have kind of come across the channel?
Yeah, I probably oversimplify it just a little bit, but close your loans, guys. That's it. Just be really good at service. There's, I was listening to the panel before, and there's a ton of different ways to do it. Speed's important. Customer service, being communicative with your agents, absolutely. But at the end of the day, if you just close your loans, that's what's going to get it done.
One thing I'd like to add, and so actually you heard it from our clients, so two parts. One thing I think about this market, and to Phil's point, closing loan, it's all about under promise and over deliver. You tell a realtor you're going to close it in 30 days, close it in 27. Right? Be ready and make sure that it's always under promise, over deliver. And to the point, a good idea that I saw, and I figured I'd share it because that's what I love about AIME. We're all going to share ideas and we're all going to win together. At the end of the day, my vision from a broker channel and how we want to be part of it is we're all on the same team, right? We're 15% of the market. We're competing with Wells and Quicken and Loan Depot. They're the bigger guys, Bank of America, Chase. We're all on one team, so sharing ideas. And so I was talking to a broker just yesterday. He was telling me about one of the things that really worked for his business was every time he closes a loan, purchase, he invites the selling agent, the buying agent, the borrowers to a little happy hour, and tells the borrowers to invite 6 or 7 of his friends, and he buys appetizers and drinks for them. Just a nice thing. He said it cost me $200. Takes pictures with them, posts it on social media, tags all of them. They share it. Congratulations to the HBS for buying their house. Good job, Jenny Williams and Bill Smith, the realtors. All of a sudden, he goes, I get more referrals from that $200 little appetizer and drink thing than I get anything else. And so maybe that's an idea to help you grow your business. It's cheap, it's great, it's networking, and so that's something I heard I thought I'd share with everyone.
That's smart. Thanks, Matt. I think the lead-in on under-promising, over-delivering, closing 27 days instead of 30 kind of brings us to the next subject of technology pretty well, which we hope is a tool that helps helps lenders be more efficient and over-deliver. So far, Anthony introduced some of the AIME priorities around technology for the broker community. We heard some of the gentlemen in the last panel talk about the tools they're using today. I want to dig into technology in the future. So what does mortgage lending look like in 5 years? Nima, you want to kind of kick us off on your vision for what we look like in 2022, 2023, going forward 5 years?
Yeah, sure. I mean, I think, a lot of times when I talk to people about technology, they look at it and they say, well, this isn't going to replace the human. This is like, why do people think this can replace us? And I think of it as, I think the thing that, or at least how I've seen it used is, it lets people focus on people instead of focusing on data. And so I think of that as people, not data, as sort of one of the mottos of our company and what we offer to our customers. And by that I mean, if the system was smart enough and the information was accessible enough, then you wouldn't have all the time spent gathering the documentation, gathering information, figuring out if it's eligible for that program, sending that, figuring out what LOEs and what conditions need to be sent to that file. That would just be taken care of for you. And so I'd say the two big areas that I see really transforming the next 5 years, which will make all of your lives a lot easier in 2022 than it is today and hopefully help you grow market share. The first one is the data infrastructure. It's getting better. Today, it's somewhat, probably 100 times as much data usage in a mortgage as there was probably 10 years ago, pre-mint.com days, kind of personal financial management days, but it's still not good enough. One common misconception right now that we see is that people think that the only people who are going to aggregate their data or do the TurboTax model are the younger people. And I asked somebody to pull the numbers of who's using that data aggregation in our system today by age group, 20 to 30, 30 to 40, 40 to 50. Who do you think the number one age group in that bracket was? 60 to 70.
Really?
60 to 70 was number one, and it was like 65%, which is a large number. And I don't know why I didn't go and survey all those thousands and thousands and thousands of people, but that was the number one age group to use the data aggregation services. And a lot of times people say, yeah, well, that's not for people like me. And you're right, like 40. That means if 60% are doing it, 40% aren't. So a lot of people aren't going to use it, which is okay. It's a journey to get there. We don't need to get there overnight. And so I think that being the number one group, and then going down, maybe it's mistrust of the banks or whatever, the financial institutions or whoever it is by the younger age groups. I don't know what it is exactly that's causing that to be the low. 20 to 30 is in fact the lowest adoption of this technology in the connection to data sources realm. And so the data infrastructure is getting better, and in 5 years, every consumer, not just a consumer, every consumer will be able to, within one tap, get you all their financial information. One tap, simple, done, fingerprint, authentication, so it's the person that it is. It's not going to be a centralized model anymore. That's going to be a decentralized thing where consumers own their data and access their data and have their payroll and have their tax and have their bank records, and that's going to be a one-tap thing, which is great, except unless you then have to go and manually read through all that stuff. And so the other piece that I think is evolving quickly and will be transformational as well is the intelligence piece. How do we actually, if now all this data is being available and being useful being available for the first time and being used for the first time, systems have to be built around that data. Intelligence has to be built around that data to read that data in real time and help you flag the things that, previously you had to go and read through that paperwork yourself to flag. Letters of explanation, conditions, eligibility, approval, all those kinds of things that normally would have taken you time to go and read that, you don't have to do anymore. And what does that mean at the end of the day? And that's where the world's going. Some of that's happening today again, but I think there's a bit of a journey again, because maybe another last misconception is that if this technology exists elsewhere, why doesn't it exist here yet? Well, this is a big, very complex industry, a lot of moving parts, a lot of participants, and getting something to work in this industry and just be used is hard enough, and then you have to build on top of that. And so I think in the intelligence in 5 years, I think you'll not only get all the data in one tap, but you'll also on your side be able to see everything that you need to know about that file in one tap, and then you'll be able to focus on people and not data. And so that's how I would sort of summarize that.
I would add that, and you hit on some of the points that I thought were pertinent, namely, the efficiency gains that our industry can realize leveraging technology. But there's the quality piece, right? The ability to create a consistent quality product, which is important downstream to the investor community. And I think at the end of the day, it will end up translating into a lower cost, more efficient rate to our consumers as well. So, there'll be some expense and some investment to get there, but I think the end game is ultimately a better experience and a better economic situation for the consumer.
One thing I would add on just technology, just real quick, is two quick things. One is technology. A lot of people say technology, to Nima's point, it's for the millennials, it's for the young. The way I always think about it, and we did the first virtual e-close, and you know who did it? Everyone's like, I thought it would be like some 25-year-old with a backwards cap. No, it was a 60-year-old couple. Because you know why? Because you know who likes fast and easy and simple? Everybody, right? It's not just young kids like it. I like to sit in my bed and do the closing rather than go and drive 30 minutes. So it's simple and easy. So I don't care how old you are, technology makes a difference. Another piece I'd say for all of us in this room is technology. 3, 5, 7 years ago, it was harder for all of us, brokers, to compete in technology because of all the things going on. What's happening now, which is great because these guys are doing good things, NEMA, and a lot of lenders that are here, is we're building the technology for you. It's a partnership. I got 450 IT guys. All they do is figure out how I can help you grow your business. What you guys need? You got a new marketing toolbox? And so that's your team. So it's basically you have 450 people plus their team. And so realize that you don't have to go build it. There's a lot of great vendors out there. There's a lot of great partners. And what you can do is we're all got to work together to make things happen. I think technology, you got to embrace it. Don't fight it. Embrace it. And everybody wants easy and fast.
So you think so clearly banks, brokers, independent, depository, everybody has different technology infrastructures, different challenges. From a consumer perspective, do you think that in 5 years, the experience for a borrower going to a broker, going to a retail bank, doing a consumer direct, does that experience start to look and feel more similar and more seamless, or does one channel end up feeling really different just because of speed to market with technology or regulatory hurdles? I'm just kind of curious if you see a major consumer difference between the different participants and the different sources of capital or different sources of advice for a mortgage.
Yeah, I think if everything's one tap, which it will be, the data is going to be one tap, the intelligence is going to be one tap. You can't really differentiate on that part. It's hard. You can't. That part is just, at the end of the day, if you take all the friction out of that system, which today there's a lot, you'll differentiate on your business, on your ability to serve your customer, on treating your customer like a human and working with your customer through whatever financial situation they're in, personal situation they're in. That's how I think that's at the end of the day, the goal is to take all the friction, the menial tasks out of the process, so you can focus on people, not data. And at that point, I think that will be something that will drive an immense amount of value. Because there's probably, if I had to guess, on technology alone, there's probably $50 billion of waste that could be taken out of the system a year. And it's a journey to get there. I'm not saying it's going to happen tomorrow, but I think 5 years from now it'll be there.
When you take that $50 billion out, and like Matt said,
that goes to consumers.
Goes to consumers. That's a good thing.
That's great.
All right, well, so talking about technology, what the market looks like in 5 years, we know that Amazon has changed the experience for consumers a lot in the way they purchase almost everything now. Last month, our editorial team at Housing Wire reported that Amazon is looking at going into the mortgage industry, and just want to get some perspectives. When y'all heard that news, heard those rumors, true, false, timing, who knows? What was your reaction? How do you feel?
Good luck.
Yeah, I'm waiting to see who their management team's going to be, and then I have a feeling they're going to hire some young Silicon Valley type.
We've heard they're recruiting. So,
yeah, they are. No, I think
You got to announce something, Phil?
I'm too old, I think, for Amazon now. I used to be the young guy. But no, I think that, clearly they have a brand. But I do kind of, in your comment, because the data is becoming so exposed and aggregated, I think technology is becoming commoditized, more and more commoditized. And so in 5 years from now, I do think, to your earlier question, you're going to see a level playing field amongst pretty much everything. Technology will be the bar. You just have to have it, right? And the distinction will be how you ultimately service your customers. And think about this, if you go back in like early 2000, I think something like 91% of transactions that occurred in the U.S. were driven by a real estate agent, right? And I would think that between 2000 and now, we've gotten just a little bit more, technically enabled, just a little bit, right? But now it's 96%. And so I think what we all kind of consistently are saying here is that technology is incredibly important, but you are never going to remove the human touch from this. And so when I think about Amazon and what they could do, they could definitely disrupt it, but they could also come at it from where a lot of people often do without fully understanding how dynamic, complex, regulatory, sticky mortgage banking is, and think that they're going to disrupt and at the end of the day fall flat on their face. That would be kind of my bet, I think.
Yeah, the way I think about Amazon is, I don't think they build anything today, right?
Right.
So they're basically a marketing company, and we know in our business it still takes a lot of arms and legs to create a mortgage. And you just have to look down the street from us. There's one of the biggest lenders. I guess maybe they're the biggest lender recently, and they have a lot of bodies behind
Who's that?
their machine. Can't think of their name off. But I don't see Amazon building a manufacturing plant to create mortgage widgets. I don't see it.
No, I don't either.
Yeah, and I would say I love it, right? I love when people come in and compete with us because the best part is the more people that think they're competing with us, what happens is it raises awareness to consumers.
True.
And when you raise awareness to consumers about shopping and looking for a great deal, you know where they end up? Brokers, right? Because you're not going to end up at a place like down the street from us, as he's talking about, I'll just name them, Quicken Loans, right? That has a 4-point margin, right? That's not where it's going to be. They're going to end up with you at a lower margin, a better option, faster turn times, and wow the client. So there's opportunity. So all these things create opportunity. And it's just like Eric Thomas talked about, it's all mindset, right? Like his wife got, what he said, got MS. Like, does that mean the world ends? No, he went and said, I get to spend more time with her. It's a mindset. They come in, they compete. That's great. More people on our industry, the better. The more shopping, the better. The better, more people that want to play in this game, the better for all of us. We're all going to win together. The mortgage market's going to grow. The industry is going to grow, and we're all in the best position, and I feel really good about that.
All right, nice. We talked a little bit about the different home buyer segments, the baby boomers, retirees, first-time home buyers, and the word we've probably heard way too much of in the media, my outlet, and many others, millennials. I believe the last numbers we saw were 36% of 2017 home buyers were millennials. So the rumors that millennials are never going to buy homes are certainly not true, but there's still a massive wave of first-time and young home buyers getting ready to enter the market. What's holding them back? Lack of knowledge, lack of inventory, perspectives on this next generation of home buyers?
Yeah, I think it's both. Some lack of knowledge, and clearly we're all faced with lack of inventory in just about every market in the country, right? So that's everyone's faced with that. Great point on the 36%. So that actually represents the biggest generation right now that's buying homes. Right. So we keep saying the millennials are coming. Well,
they're here.
Guys, they're here.
Yeah.
They are the market right now. And just to kind of put it in historical context, that age group historically is about 40% of the market. So they're here, but there's still an opportunity within that segment to grow even further into it. So, I think I'm actually raising, 2.5 millennials. I think she might be right on the cusp. And so, their pace is just a little bit different. In one way they're impatient, but in another way they're very patient. They're not racing out to have their first home at 22 years old, and they're enjoying life. And so I think you're going to see that generation just do things, and they'll hit the numbers. It's just going to be a little bit later in their age.
Yeah, so we were 42% last year, so I would definitely agree that millennials are here. I think inventory is definitely an issue. I mean, we see that all over the country. Housing starts are up a little bit, but we still are going to have a problem for probably another year or so. And I think to Brian's point, it is, millennials they want to be more mobile, right? They're waiting to have kids, and the millennials I know, they waited like 5 or 6 or 7 years past when I had kids, and now they're starting to buy homes, and so I actually think it's incredibly encouraging because it is a very big population of people that still have not bought a home, and I think the next 2 to 3 years, as the inventory issues start to correct, that you're going to see a pretty decent boom just from that alone.
That's fair. Going back to Barry's presentation this morning, he talked a bit about the rental market and moving renters to home buyers and the massive opportunity there is. He painted a picture here for Orange County. I think it was 300,000 potential renters that are potential homeowners or people that are prepared to buy. I saw some stats that by the time a person turns 30, their rental, their percent of income going to rental expense is 45%, which is just massive. Do you think there's an opportunity for the wholesale, the broker community to help move some of that, those, assuming they're millennials, move them from the rental market to the homeownership market? And Phil, you mentioned like the human touch will never go away. I think that might be, it's part of it.
Yeah, absolutely. I mean, I think, listen, no one's going to rent forever, right? And I do think, though, that there is, just our industry as a whole is doing maybe a bad job at explaining the benefits of owning a home versus renting a home. I think that, the other thing that's kind of holding it back is home price appreciation has been pretty aggressive, and so the affordability side of the equation is somewhat of a problem. But that's where I think you're going to see more products come available to tackle that issue. And so I feel like it's a huge opportunity that it's just a function of timing, and it's something that brokers as a whole, you guys are poised perfectly because to Matt's point, you're in the best possible spot. You're able to provide the most options. You're the best execution, right? You have access to all the product. You have the lowest cost. You can be the most competitively priced. And I think you'll be the beneficiaries in that. And that's why I'm thinking 20%. That should be our new model,
Yeah.
20% in 2 years.
Right?
Yeah, I
22.
Yeah.
I think it's going to happen. I think it's going to happen. Brokers, we're growing. We're going to grow together. The thing I would say about the renters and just in the education of people, the truth of the matter is a lot of people who go to buy a house, what they do is they talk to their parents, and the parents say, save 20%
Right.
and go talk to the bank.
Right.
They're giving the wrong advice. So education is a really big thing, and us being out there together and us communicating with people, being in the neighborhood, talking to people about what's going on, and educating even real estate agents. They don't understand it the same way either. So there's an opportunity. A lot of people in this room are real estate agents as well as originators. So I think it's a huge opportunity. Brokers are best, and people also don't know about the down payments. People always think, oh, I got 20%, 3% down is a great program. 3.5% FHA, 5%, 10% down. All these opportunities and letting people know about these things. More and more we educate people, the more and more people will buy houses, and then more and more of them will end up at mortgage brokers, in our opinion.
Yeah, it's as awareness goes up and education goes up, whether it's through feet on the street, working with them, or it's through companies like Amazon coming to the space and raising awareness of what's even possible to consumers. I think there is still a lack of understanding of what's possible on top of the low inventory. Those two things together definitely held people back, but it is a life-changing thing. I was born in Iran. My parents, we came here when I was very young, and had it not been for a house in the 90s when they bought in Cincinnati where I was growing up, where they, it was 4 of us living in a 2-bedroom house. I was sleeping on the floor of my parents' bedroom because my sister, who was a little older, and wanted her own bedroom, which I understood. She was going through, becoming a woman and all that. And so, had they not done that, had they not been able to buy a house, and they went and talked to their banker, just like you said, their advice was, and the banker said, actually, we do have a program for you. We have an FHA program for you, or some sort of low down payment program, and they only had $5,000 saved up, so they couldn't afford anything other than that. But that's changed their lives. Fast forward 20 years, they now, have a retirement sort of linchpin that they can say they can actually retire. They could not have retired had they not done that 20 years ago. And so, as difficult as it is to get out there and educate people, it's so important to the people on the other end. And it's changed my life, changed my parents' life, and I think there's a lot of people out there who if we don't make this education, create transparency, help them understand what's out there, what's possible, they may never get those chances. And by the way, how to serve millennials, we have a lot of data on millennials because of our platform. About 45% of our volume comes from millennials today, going through our platform, a little bit more than I guess the average. And across those those people, I guess 56% of those use mobile to apply for their mortgage, which I think is pretty cool to say. 5 years ago I was pitching our product as a mobile, mortgage thing. People were like, "What are you talking about? Nobody wants to use mobile for their mortgage. It's crazy. Build it as a desktop thing." And we said, no, we're going to do mobile first. And so I think serving your customers, being mobile friendly. They want mobility, but they also want mobile, and it's like how do you serve them in both ways? And so I think that there's an opportunity to do that nowadays.
All right, thank you. All right, so we got one question specifically for our lender panelists. So can each of you give us one piece of advice on the value that independent originators bring to their clients and what they can do to create awareness around the value of being a broker and independent originator. Phil, you mind kicking us off?
Yeah, one piece of advice on awareness. I do think that, and this is why I'm super excited about AIME and what you guys are doing here. There needs to be more support in terms of the CRM side of the business, and so again, keeping in front of your prior clients, leveraging the tools that are actually out there today. I mean, there's really good vendors that you can use to market. All the lenders have, tools and whatnot that you can use to market. But it's really just a function of just getting the word out, yourself. I mean, so I think that this association will help. What's really been holding back wholesale, I think, for a while is there hasn't been a true group that's come together to actually provide best practices and things that you guys can learn from. And so I would say, start with this. This is exciting, and I'm looking forward to what we're going to do in October.
Excellent.
Yeah, mine's kind of more basic, blocking and tackling. And we talked a lot about technology today. A lot of the sessions touched on the importance of technology, and so there's no doubt it's coming, right? I remember the days when, we thought we were high tech when we put a fax machine in to take rate locks. That was like our automation of rate locks, right? And when the market was getting squirrely, you'd control your hedge by unplugging the fax machine.
I do remember that.
So, but at the end of the day, it's really
Sounds like a good business.
Right, exactly.
It saved us a couple times.
That's your announcement.
At the end of the day, it's about you guys and how you face off in your local markets with your consumers and with your referral partners, right? I think what we've talked about here in this short session and what you heard over the course of the day is there's all these great technology solutions, and they're going to help with efficiency. And Anthony talked about what he does with his company and how he's doing fantastic numbers and hasn't had to grow staff to do it. And so I think it's it's a balance of growth, quality of life for you as owners and for your staff. But it really just comes down to the basics. It's be different in your market, right? Differentiate yourself in the market, add value, educate, become a trusted advisor, and then price isn't as important. You're not competing on price solely at that point, right? And so if you continue to create value for your referral partners and your consumers, it's not going to be about rate at the end of the day. You got to be in the game, we get it, but it's not going to come down to that.
Good. My take is, my advice, I guess, would be just tied to, build a long-term business, right? So, I think I think Anthony had a slide that said something about build a long-term business or long-term relationships. And the way we think about it is, so many people think about this loan, and what you got to do is think about this customer, and this customer's referral network, and this customer going online, and this customer coming back to me. And so partnering with the right lenders, and we've all talked about this, everyone knows what Brawl is, everyone knows all those things, but also, making sure you're building the right technology to protect your business. But the thing is, you have to build a long-term business. It's not about how much can I make on this one loan, or I close this one loan, and it's like, close it and forget it. That's the wrong, and that's what the other lenders and what lenders hope you do, and what the rest of the market hopes you do, and that's not the right way for a long-term business model. So long-term success is sometimes tied to short-term decisions that might not be the most favorable at that moment. And so I guess I always advise people is like, where do you want to be in 2 years? Set a goal, and then figure out how do you get there. And so I closed 20 loans this month. I want to close 50 loans a month in 2 years. Okay. Well, of the 20 loans I close right now, how many of those people are going to refer me a client in the next 2 years? I hope it's 60, 70%. How many of those borrowers are going to actually come back to me again, right? Hopefully it's 30, 40%. Who knows? Set those goals and manage to it. But you got to set long-term goals. We're big at goal setting at UWM. We want to set goals, and then we say win. What's important now? I set that goal to go from 20 to 50. Okay, how do we get there? What do I got to do today? Well, today, I got to wow this client. I got to ask him for a good review. I got to make sure I think long-term about my business and think about who I'm partnering with from a lender perspective, a vendor perspective, realtor perspective, title perspective, all of those things. And if it was easy, everyone would do it. It's complex. You have to think that through. And that's why, guys like Anthony and other people, those guys on the panel have all been really successful. And a lot of people in this room have been as well, thinking long-term rather than, what about this one loan? You got to take care of your loan. That's how you build a long-term business. But think about where your goals are and where you're trying to go.
Excellent. Thank you. Well, don't want Nima to feel left out, so got one final question for you. Nima, so Blend has done an excellent job winning relationships with some of the largest retail lenders in the country. Wells, US Bank, Movement, just to name a few. We appreciate your input on technology and your ideas today, but what are you doing here with the broker community?
Yeah, I mean, fair question. Fair question. I think it's like, first of all, building technology for this space, because it's so complex, is very difficult, right? Like serving something that can serve, the variety of types of consumers that come through and the variety of, some of them want to start online and end offline, or start offline and end online, and they have so many different behaviors, and at the end of the day, you want to be able to meet them where they are, and it's really complicated, really expensive to build that. And the problem then is when you build something that's really expensive and really complicated, you need to find a way to distribute it. And so I think that our partnership with the large lenders has been around that. And historically, for us, it's been really hard to reach brokers because as much as we'd love this in front of every consumer and touching every loan, that's really, really difficult. But with the advent of AIME and the group that's been put together here, I mean, I don't know how many people there's people huddled in the back. There's probably 500 people in this room right now. I mean, it's really cool to see everyone in the same place for the first time. And I feel like this is the first opportunity that we've had to really work with the brokers. And so we're not up on this panel, I don't think by accident, because we did want to make one sort of good announcement for everyone here, which is we're going to take all the technology that we've been building at Blend for the last 6 years, to help serve consumers better, to help aggregate data, to have a better customer experience, a better mobile experience. And in partnership with these three guys and their firms and AIME, AIME is going to announce that this is going to be a free offering to all of their members, we're starting the build out today, and starting next quarter we'll be live with all of the members. And so you can go online today, blend.com/broker. You can sign up as soon as it's available. We're going to make it available to everybody in this room for free, and hopefully keep adding keep investing there, keep building better and better technology as the landscape evolves, so that you can focus on people and not data.
And I'd add, Nima's doing great, and that's great. I know these guys and our company, we're excited to partner with these guys. It's important that we all invest in technology together, and Nima's stepping up, and Phil, Brian, our company, and there's other companies I think hopefully too, but really the credit goes to Anthony and AIME, because what him and Mark are doing, they're trying to unite us. Like I love their saying, independent together. We're all independent, but we're all on one team. And using your technology and partnering with you guys, it's going to be great for all of us. So it's really exciting. And
yeah, this would not be possible without them. So,
Excellent.
Thanks, AIME. Alrighty.
There'll be more information on this exciting announcement on Housing Wire tomorrow, and and also a shameless plug. We're doing a lot to be a better partner for the broker community. So right after you go to blend.com/broker to sign up for this exciting new platform, visit Housing Wire, sign up for our new Lending Life newsletter. It's a newsletter that we created with feedback from the LO community. It comes out twice a week with content focused specifically for loan originators. So we'd love to have you all join, and excited to see what AIME becomes and be a big part of this. So thank you all for attending
Give
today.
them a round of applause. Housing Wire, a lot of people could have come out. The CEO of Housing Wire came out to support us. Give him a round of applause. It's good stuff.
Thank you, Matt.